Alright, what's up guys? Today is 11/21/2024 and I'm going to be teaching you guys about volume by time and volume by price and how to read it, okay? So, volume by time is this indicator at the bottom here. This is a little bit different than the standard volume by time indicator. The only difference is it'll show buy and sell pressure within each candlestick, so there's red and green versus just one solid color, and then also it marks out average volume. So this little gray shaded area is basically saying that this is the average volume, and my general rule of thumb is that if it's not above average volume, then you shouldn't be trading it, or it just is an indicator that volume is dropping off and that you shouldn't be trading it, really. So, one of my favorite sayings is LVK, and that stands for low volume kills. And basically, you should not be trading during low volume time frames. Okay, so before big news events, or even if it's just a low volume day, you really just shouldn't be trading it. Okay, so protect your capital and don't trade it. Okay. Next, we have volume profile, which is this volume indicator on the side here. It's volume by price instead of volume by time. And basically, it is using past data to record information and put it on the chart. Okay, so these little things that stick out here are called nodes. They're volume nodes. And basically, it is saying that there's more volume in that area. Okay, and then right here we have basically a level generated by the volume profile, and it's saying that this is the most concentrated area of volume, or where the most volume lies, okay? So it likes to be drawn towards it like a magnet, and it also likes to hold at it and then reject off of it, or continue through it, okay? So, and depending on the time frame, the POC changes, okay? So right now it's at 591.59. If I go to the 5 minute, it's at 589.89. If I go to the 15 minute, it's all the way down here at 588.08. Okay, and that's just an example, and I can show you all these different time frames really quick just to give you an example. There's a 30 minute, there's the 1 hour, it's up here on the 1 hour, and I go to the 4 hour, and it's all the way down here. Okay, and look at that rejection off the POC. Okay, but how can this help you use how can this help you use this indicator for day trades? Well, my favorite trade for me to take is a break through the POC and then a retracement back up to the POC and then continuation off of the POC. So one trade we took today was right here, and I'll put my levels on the screen just for demonstration purposes. Um, so so we break through it out the open here, and I actually did take this trade, okay, from 2 to down here. But the trade I'm going to be talking about is when we come back up and we retest this POC. We're on the 3 minute right now, and I'm on SPY. We retest the POC, and then we have a clear rejection. And right here, I took the trade to the downside, and it was a 3 candle break. I took profit around this area here when I saw we weren't really moving anywhere, and then boom, that was a successful day trade. Okay. Um, and then you can also use this for longer time frame holds and swing trades and that sort of stuff. So um, here, and this is I actually use this indicator to get an entry on Bitcoin. So let me just pull that up really quick. Go to the 4 hour time frame on Bitcoin, and then look at this. So this is the volume profile. Okay, and then the POC is sitting all. Here, wait, let me go to. The POC is sitting all the way down here, right? Okay, and then we break through the POC here, and we're running up, and then we fade back down to the POC. Fade is an old term language that I learned from my mentor. It basically just means like going down, fade. But here we come back down and we retest the POC. So we're moving up. We break through this. We come back down. We retest it, and then use there's a doji on the POC, and then another candle right after the doji indicating, okay, we're probably going to run up. And I entered for a long-term position on this trade right in this area here, so right around that 69,000 mark, and now it is currently sitting at 98,000. Thanks, Trump. But that was just an example. Okay, let's go back to SPY. Let's go to the 5 minute. Okay, and I can't show you the volume profile for previous days because it's active, but this is what the volume profile looks like, and basically what you can expect. So like you can see how up here, how there's here. Let me remove my levels. You can see how up here, how there's no there's no nodes of the volume profile. Okay, and when there's no nodes of the volume profile, it basically means that one or two things is going to happen. One, we're either going to hold in this area here. Two, we're going to have a really slow chip up because there's not a lot of volume in these areas. Or three, we're going to hold and then we're eventually going to start fading back down, okay? And those are the three main ways to use the volume profile. All right, so next we're going to talk about price levels and how to make accurate price levels, okay? So let me just go to a different chart here. Okay, yeah. We're on ES right now. I'm gonna go to a higher time frame. We're gonna go to the 4 hour. So for standard making levels on different charts, I'll go from the daily to the 4 hour to the 1 hour to the 15 minute. Okay, but just for demonstration purposes, I'm just gonna do the 4 hour, the 1 hour, and the 15 minute. Okay, so we're gonna start on the 4 hour. And this could take a long time, but I'm just gonna do it pretty quickly just to give you an example of what I'm looking at. Okay, so first I'm gonna mark a level right down here, and what made me mark that, actually I'm going to put that right around there. What made me put that there? Well, every time we came into interaction with this level, we had some type of price action, okay? So right here, we run up and we reject off the level, and we touch the level to a T, okay? you, we we retrace off of it and we come down, and then we actually break through it. We come back down and we touch it to a T again, except well, once is the ceiling is now the floor. I don't know if you guys have ever heard that phrase, but it's basically saying since this is the ceiling right now, since we're below it, and then since we break above it, what once is the ceiling is now the floor. So we come back down and retest the level, and boom, we get our retest, and then boom, we get a move off of it. Okay, but then we come back down, and this all this action right here, you see all these wicks coming right through our level, and I'll even zoom in to give you a better idea of what we're looking at here. So we have all these wicks touching through the level, and this tells me that this level is respected, okay? And then we come over here, and boom, we have more action at our level, okay? Boom. Okay. All right, I'm gonna mark a few more just to show you guys some more examples, okay? So I'm gonna throw one here, and what made me put that there is all this action here, right on our level, this action here, this action here, and then we do break right through it here, but it's not gonna reject off of it every single time. It's just an example. Okay, I'm gonna keep marking levels. There, there, there. I'm gonna mark one more right about there. Okay. So these are all 4 hour levels. Okay, so now I'm going to go down to the 1 hour. And I'm going to make all my different time frame levels different colors. Okay, so we have the 4 hour. Now we're at the 1 hour. So, and you can also see how it's respected at a lower time frame as well. Okay, so now we're on the 1 hour. I'm going to mark out a few more that I see. So there isn't a whole lot of conflicting price action in these areas because it's just straight run, but I'm just going to mark what I see. Okay. All right, so we have some holding in this area here. Boom, we have a rejection here, and we have a rejection here. And then this is another example right here of a break through a level, a retracement up back to the level to retest it, and then a continuation off of the level. So this would have been a great trade to take. Um, and then also with making these levels also represents price action. So the more you see the price reacting to your level, the more you're going to naturally learn about price action, okay? Um, I'm gonna make these levels, the 1 hour levels, different colors. I forget what other level I marked, but okay. Okay, and I'm gonna put another level. I'll put one right here. I'm gonna put one right about here. So what made me put that level there? We have some action over here conflicting with it. We have some action over here conflicting with it. We break through the level here, come back down, almost touch it to a T there. We hold right at our level there, and then more holding at our level there. Okay, so then now we're gonna go down to the 15-minute. Whoops. And we're gonna do the same thing. Okay. All right. So I see a level here. I'm going to make this a different color as well. I'm going to make this white. Okay. Okay, we're going to move down a little bit. Okay, I see a level right around in this area here. What made me put that there is we have a rejection here, and then we have a hold here. Okay. A breakthrough and a hold. Okay, so now that I've marked a few levels, I'm going to show you guys what they look like on a lower time frame while you're day trading. Okay, so I'm going to go down to the 5-minute because that's typically what I trade on, the 3 and the 5-minute, nothing lower. Okay, and I'm going to show you guys what our levels look like. Okay, so right away, we have a rejection off this price level here, and then also we have just a bunch of conflicting action with our price levels. Okay, so we have action here. We have action here. This is also pre-morning. There's not a lot of volume because this is this is 3 a.m., right? So there's not a lot of people trading, but market opens here, and then we have action with our levels down here. We have action with our level here, and then we can go a bit lower. Look, we come and touch this level right to a T here. More action in this area here on our price level. We're going to come down more. We have a perfect rejection off our level here. Holding at our level here. Rejection off our price level here. Another rejection off the price level here and here. This one isn't perfect, but we have another rejection here. And so basically, and then another rejection to a T here. Boom. And look, we break through this level, we come back down, we retest it, come back up a little bit, retest it again, pop. Okay. So this is just an example of how to use price levels for day trading. Okay. Okay, in the end of the video, I'm just going to talk about why I trade using price levels as opposed to a bunch of lagging indicators on my screen. Okay, so when you think about Wall Street and the system that they use, do you think they're using MACD, RSI, and EMAs and a bunch of lagging indicators to move around billions of dollars, or do you think their screen looks like this, clean, and whenever it hits their price targets, they have a button, and that button activates millions of dollars, if not billions of dollars worth of orders, and that is what moves the stock market. So when you ask yourself who is controlling the stock market, it's not me, it's not you, it's not retail traders, it is Wall Street. Okay, they manipulate the stock in order to take as much money from retail traders as they can. And I don't know if any of you guys know this, but Wall Street calls retail traders dumb money. And if you don't believe me, look it up. Okay. Now, when you think about Wall Street, they have a team of traders, okay, and they're waking up at, if not 5 a.m. every single day, early, getting prepared for the market, and they're deciding, okay, what are the moves going to be today? What What is the sentiment? Is there news coming up? And they're going to be asking themselves questions like that, okay? And they're not looking for, oh, there's a triple bottom here, or oh, there's a bull flag here. No, they're watching the price action around their levels, okay? And another thing that I heard from my mentor that I've taken this to heart is fail to prepare, prepare to fail, okay? So if you show up to the market not prepared, not ready, the market is going to show you who's boss, okay? So you have to come into the market with a plan. You can't just wake up a few minutes before a market open and expect to crush it. And if you do crush it, that's actually a worse lesson because it shows you that you don't need to work very hard when in fact you do need to work very hard in order to become successful at this thing. Okay? So that's just my 2 cents. That'll be it for this video, but I'll post a few more in the upcoming days. Thank you for watching. See ya.